First off, what is your reaction to what we're seeing unfold today in the oil market?
Well, we've been dealing with this collapse in price for a while, so it's not, let's say, unexpected. We all know we're dealing with, I guess it's unprecedented demand destruction. Things we haven't seen in our careers, and so we're expecting we're going to be dealing with this for a while now.
And in terms of dealing with it, how do you deal with it?
Well, I mean, parts of the playbook are new, and parts we've had to deal with for quite some time with volatility. So you're seeing companies focus primarily on liquidity. That's the near-term concern. Companies, even if they have relatively modest debt, aren't designed for $12 oil or even $20 oil. And so companies have been cutting their spending. That's certainly what we have done. We came into this world, into this year, thinking we would spend close to $500 million. Several weeks ago, we announced that we were effectively putting the brakes on that. And so spending's coming to a screeching halt. I guess the next thing people are looking at is costs just generally beyond just capital. You've seen some people deal with layoffs. We haven't done that. We've looked at wages and costs across the board. And it's all about ensuring that you maintain as much financial strength as you can. Fortunately for our company, we came into this with a relatively modest amount of debt and a pretty good hedging book. So that's certainly helping us. But it's really focusing on liquidity and maintaining financial strength, because this price collapse is really quite incredible.
You mentioned the moves that you've already made. What would determine if you felt the need to cut back even more? What would be the factor to be watching?
Well, price is critical, and then I guess the time we stay here. As you've seen, round numbers, the world generally uses 100 million barrels of oil a day. We don't know where it is now. Is it down to 80 or 70 million? As activity, as the economies have come to a screeching halt. And so, now we're dealing with volumes or prices that are sort of at cash cost levels. And so producers are starting to shut in production. You've seen what looks to be a bit of an interesting OPEC, the broader group. And so all of that is going to cause the system to balance. So it will balance. And the question is just how long we stay here. We really don't know. We don't know what the economy is going to look like, or how economic growth is going to come back in. Our guess is we're dealing with this for the next several months. And then we'll start to see some recovery as people start to come back to work. So again, it's maintaining that financial strength as long as you can. Shut-ins, people are starting to shut in oil production as we speak. Most of our oil that we're selling today, we actually agreed to. Oil that we're producing today, we agreed to sell about a month ago. So actually today for us is okay. But as we look into May, prices, the physical oil market has become just completely dislocated. So again, it's a question of staying financially strong, looking at costs across the board, and trying to get to the other side of this.
So obviously we've covered extensively the news from last week with the federal government's plans on dealing with things like orphan wells and methane mitigation. But we have once again heard the Premier of Alberta, Jason Kenney, with his pleas for more help from Ottawa. What would be your message to Ottawa this morning?
Well, those first two programs, I think they're nice, and they're strategically important, and they're going to continue to allow Canadian oil companies to continue with really strong environmental performance, some of the best environmental performance in the world. They really don't do anything for the near-term liquidity challenges that many companies are going to face, and so. I guess we're looking for a few things. There has been a program that's been discussed. EDC is talking about loans for sort of mid-cap and smaller companies. That seems interesting, but we're going to want to see the details on that. We're going to need to see the details on it. I would say timeliness is going to be really important. efficiently and effectively allowing viable companies to get access to that capital will be really important. We really need to understand the scope of it as well. I mean, this is an incredibly significant problem with incredible scale. And the programs that we have details on to date certainly won't do much to deal with that. So I guess we're looking for speed. Uh, we're looking
I know
for
you can
speed,
only
and we're
talk
looking for.
about your. Sorry, I
Sorry.
think our connection's a little wonky there, Ian. Just before we let you go, since you're talking about speed, and I think that while you can only talk about your own company, any guesses on when it comes to that issue of liquidity and getting access for loans? I mean, what kind of dollar figure could we be talking about here? Because we haven't gotten too many specifics, for example, from Ottawa on that. What do you think the industry needs in terms of that kind of support?
Well, the scope of the problem is pretty significant. The provincial governments talked about 20 or 30 billion dollars being a number that could be needed, depending how long this goes. So, we're talking orders of magnitude more than has been discussed to date. And so, looking for some details on that will be really important. You think about what happened in the auto sector. I mean, that support for several companies, 2 companies, I believe, maybe 3, went to about $14 billion. We're talking about something far more significant with there's 900,000 people employed directly or indirectly in the oil and gas business. So we're looking for something that's going to be meaningfully larger than has been provided to date.